afternoon, everybody. Welcome to your weekend edition of the TraderMerlin Show. It is Friday. Cheers to all of you. I hope that we were caught up in some of the emotion and fun that happened in our markets today. It was actually a really good closure to the week. I love today. So I'm going with some good stuff. I'm doing the Jefferson Reserve. They actually have a bourbon that they sail around the world and age it from a boat. So I'll have a glass of that one. Cheers. Don't want to rock the boat. All right. And yes, Naum. Whew, that's a good one. Naum is correct. I do have a new Friday whiskey drinking picture here. I figured the other one made me look like I was almost homeless, even though I had a bow tie and a jacket on. Tie's a little crooked in this one, but I look a little older, maybe a little more dapper, and I'm definitely smiling more because this is post-pandemic Merlin. The other one was actually right in... Oh, Rajesh! Dab nabbit! I was supposed to wear my disco shirt today. Son of a biscuit! See, this is where I wish I had TJ on so I could run downstairs, grab that shirt, and bring it back. My bad. I even have the note right here. It says, wear your disco shirt tomorrow. Damn it. No way for me to run and do that now. Rajesh, I owe you the disco shirt, and it is actually perfect to that picture. Anyway, let's get things going and talk about what happened in this trading week. We'll run through some of my positions. And we'll also run through some questions and comments on my positions. Of course, you guys know the routine. If you have a question, type it into chat. If it's directed at me, put question marks before it just so I could I can scroll through and see that it's coming directly to me. If not, just chat away amongst yourselves. Keep it civil. For those of you who might be new, hit that subscribe button, like later on if you like this show. Here's my graphic for today. Yes, AI generated, but I wanted something like an explosive background, kind of wild volatility, and this is what it gave me. I think it's a pretty damn cool picture, so I threw myself having a nice little glass of whiskey. On the top of it, it is the 10th of February today. Let's start at the bottom, work our way to the top. Cryptocurrency, still feeling the pain. As I mentioned on yesterday's show, right as I finished during my Crypto Investor Live program, which goes from 10 a.m. to 11 a.m. Pacific time, I talked about big announcement coming out. There's a rumor that there's going to be a settlement either with Ripple or with Kraken. And lo and behold, it was with Kraken. Kraken had to pay a $30 million fine. They removed all their staking. All of my staking positions, by the way, for anybody here who has positions at Kraken, this is not a freak out Celsius Voyager kind of moment. All that happened was they removed everything that I was staking and just put it back into my account. So it's not like my funds are gone. There's no real crazy risk to you at all. It's just saying that their systems have changed and now they're no longer going to offer staking, which sucks because Kraken had pretty good staking rates. Now the question is, will that spread over to things like Binance or Coinbase or some other firms? Time will tell. I am going to be moving mine to areas where I can stake, and that will probably be on DeFi marketplaces. So that still has the crypto world a little bit shocked. I think a lot of people looking at it going, uh-oh, does this mean more regulation? And, you got to look at it as just... stupidity on the part of Gary Gensler. And maybe I could enlist the help here. How does one elicit change? And I'm asking a serious question. Like, how can I get out there and tell these officials that what they're doing is asinine? Preventing staking, which is your securities are going into the protocol. It's not theft. I'm not worried about Three Arrows Capital. I'm not worried about FTX. I'm not worried about Terra Luna. I'm not worried about Voyager or Celsius. Those companies were scams. Right? They were doing things bad with funds. When I'm staking, I'm literally going into those protocols and contributing my cryptocurrency. There's no one controller of it. So this is not something the SEC should be thinking about it. Keep in mind, the Security and Exchange Commission can still not give us, after 3 years, what is the definition of a security. It's in your freaking title. I need a glass of whiskey. I'm going to get all riled up today. So the SEC went after Kraken. Going after staking, yet what they left investors hanging on is FTX, Terra Luna, all these other companies that scammed people. That's probably should be their first focus. So how does one go about facilitating change at the SEC, right? How do you get in there and say, listen, you're focusing on the wrong thing. You're focusing on something that's not really that significant from a risk perspective, yet let these businesses thrive and steal people's money. That's the problem. Well, I don't know if it's necessarily unsophisticated traders. I would say it's uneducated elected officials, right? And Gary Gensler is a very smart man. He actually taught cryptocurrencies. So I'm kind of surprised he's going after staking mechanisms, whereas why don't you go after every exchange and make sure that accounts are segregated, right? At this moment, we have Coinbase, you have Binance, and you have Kraken. Are the customer funds separate from company funds? The answer is no. They should be, right? It should automatically be the first thing. So why aren't they going after that and making a rule immediately that customer funds and institution funds or company funds need to be separated? That's the simplest thing you can do to protect investors, yet now you're going to go after staking. Just straight stupidity. Anyway, the rant is over. What did it do to crypto? It certainly created some pain over the past couple days. Today we had some follow through from that announcement. I'm looking at this Bitcoin futures chart here, which shows a gap. When we look at the spot chart, it will not show the gap. Let me scroll down here and find my Bitcoin. There we go. Go to BTC. All right, you don't have a gap. You actually have a pretty interesting point that I think we're going to get to. I mentioned this during the show, actually on Monday, Tuesday, Wednesday, that if we get down below this upper yellow box, we'll probably drop straight to this middle one, right around 21,000. I stand by that. I definitely think we are going to see it come down to that level. Right now, if we start to see Kraken can no longer offer staking, funds are going to pull out of Kraken, just like mine are. The ripple effect may be that Binance.us can no longer do staking. Who knows? They offer some great rates, but who knows? I've got a lot staked there right now. And Coinbase. If that happens, what will ultimately happen from that is going to hurt their businesses. Now, if we look at Coinbase, which is the only really publicly traded U.S. crypto exchange, look what happened to them over the past couple of days. From $88, now trading at $57. Woo! I mean, Coinbase has had a phenomenal run with this current crypto run-up. So kind of interesting, and I still think you're going to see more downside movement here as the nervousness of the regulator crackdown, I think, is going to spread a little bit more. Let me see here real quick. Was a staking problem related to the crazy interest some firms are paying? No, and here's the really funny thing about that. It's funny that you mentioned that. So some firms were okay, so for example, for those of you who may not know, let me just bring it down a little bit. With Bitcoin, which is proof of work, there is no staking because the network doesn't operate off of a staking mechanism. Things like Ethereum operate off of what's called proof of stake. And therefore, when you take your crypto, you deposit it into the network. It literally is locked in the protocol, the code, if you will. Those deposits help facilitate transactions. They help verify transactions, make sure the blockchain's functioning. And the more that's staked, the more diverse and spread out it is, the safer the network ultimately is. So staking is a mechanism to help grow, establish, and secure a network. Now, what Celsius and Voyager are doing is you deposit your Bitcoin, which there is no staking. People believe there was, and they would offer you like an 8%. I think at one point it was 8% for Bitcoin. Right now, you can go and deposit your crypto at crypto.com, and they will pay you like 5% for Bitcoin. In order for crypto.com to pay you, let's say 5%, and since I'm making numbers up on the fly here, let's be legit and go to crypto.com, just so I can see exactly what we're going to get paid if I deposit Bitcoin this exact second, okay? Well, okay, we're in the US. We'll scroll down here to where it says lend. Sorry, I have to scroll through all this garbage to get there. Calculate your rewards, okay? So herein lies the problem. It says right now I can get 1.5%. Let me go and just verify that down here. So Bitcoin, I can earn 1.5%. Since there is no staking mechanism on crypto.com, what they're doing is they're taking my crypto, they're lending it out somehow and earning more than 1.5%. The same thing a bank would do. There were some sites that were offering, 5, 6, 7, 8% on this. Now with proof of stake, what Kraken was doing is they were aligned with a company that was called, I believe it was called Staked. And they would send their crypto to that company, and that company would stake it for you. Because, let's be honest, it's somewhat cumbersome to stake if you don't know what you're doing. That's why I teach the CIL, so people can understand how to stake their cryptocurrency. So, for example, Kraken would pay you between 8 and 10% if you staked your Polkadot. Okay, great. But if you do it individually yourself, you could get up to 14, maybe 15%. 14.6, the highest I can get doing it manually. So if I can get 14 and they're only going to pay me 8, that 6% differential there is the profit for staked or for Kraken. The good thing about Kraken is they were not paying you more than the staking rates. So for example, when you stake on a specific cryptocurrency, they give it like a dividend, right? You go to GE, you get X% dividend. If somebody's paying you more than that GE dividend, something fishy's going on, right? What they're doing is they're saying, okay, Polkadot is 14%. Okay, we'll give you 8. We're keeping some of that. Ethereum is 6%. Great. We'll give you 4%. We'll keep 2%. I've never seen them at a crypto when you stake at Kraken where they're paying you more than the base staking rate if you did it manually. That's why I think Kraken is fine and safe here. But I think what happened is they're like, look, we don't want to mess with the SEC because we want to go public. And when we go public, we'll become multimillionaires and Bob's your uncle. That was for you out there, Rob. Rob C in the UK. I used the Bob's your uncle reference today. If we keep it up, I'll say it's the bee's knees just to make it a complete showing. On that, third sip of whiskey. Merlin, are they able to do that like a bank fractional? Yes. So Yowza, this is the big problem. Let me explain that real quick for all the viewers out at home. And again, thank you for taking me down tangents here. But, you know, when you deposit your $10,000 in the bank takes that money, says, thank you very much, Mr. Rothfeld. We are going to pay you a whopping 0.04% interest. And just because I'm making sure my numbers are right, let's go FDIC, national, where's TJ? We need him. Average rate. Average. So just so we know that number and I don't have to make it up. Let's go over here. National rates, FDIC, that's a 12-month CD. Savings deposit, national deposit rate savings. This is from the St. Louis Fed. It's 0.33%. So you're making a third of a percentage point. All right, that's pretty ridiculous. There you go, Rob. Good to see you. What the bank is doing on that $10,000 deposit that I make is they're taking that, giving me 0.33% per year, and they're going to lend that out to somebody for a car loan at 8%. They're going to lend out to somebody at a mortgage at 7%, right? So I basically am allowing a bank to make money off of me. This is why I love crypto, because crypto represents the change in that, where I can take my money and I can lend it out and do what I want with it, and I earn the yield. So fractional reserve banking, I make a deposit. The bank pays me almost nothing for it. And again, this is created by our financial institutions as well as our educational institutions, teach you that you must save. Put your money in a savings account. Make sure you have 6 months worth of emergency savings, but put it in a savings account. You're losing money. If inflation right now, CPI is 6.5% per year right now, and you're getting paid 0.3%, you are literally losing 6.2% per year. That doesn't make any sense. So you need to find a vehicle where you are beating the cost of inflation at a minimum. Anyway, our crypto's doing the same thing. When you look at the lending protocols, that is exactly what they're doing. However, the difference is the crypto side has no regulation, no oversight. Nobody's looking at Celsius going, hey, those are customer funds. You can't do that. Whereas with a bank, you have FDIC protection. And for that, the banks are much more structured in how they lend that money out. There's a vetting process that they have to follow per the Fed's mandate. So yes, they absolutely, schools taught us finance. Yeah, good one, Alan, good one. Yeah, I actually remember I had one economics class which got into the basics of finance. And somebody asked me recently, said, who was your favorite teacher of all time? That's a really tough question. We all have somebody that stuck with us, but I think I may have mentioned this one. Mine was Mr. Austin. And I was 5th grade. I went to Pengrove Elementary School, a little podunk, tiny little town. And Mr. Austin, I remember walking in. It's vivid. I don't remember much from my childhood, but this was so crystal clear. We walked in one day, and he said, everybody grab a stack of these papers over here on my desk and sit down. He says, okay, today what we're going to teach you is how to write a check. Yes, I know. I'm showing my age. I wrote checks. I know. I actually know how to handwrite things. You millennials out there and Gen Zers who don't even know how to write anymore. So he sat us down. He said, okay, here's how you write a check. Here's how you fill in the amount of the check. And here's how you do the 00 with the line under it and make over 100. That's how you fill out a check. And they said, we're going to balance it. We're going to keep track of a checkbook the entire duration of this course. And I was like, wow. In hindsight, it was such a great class. It taught me about exactly what money was, how financial responsibility was, and how we should balance a checkbook and never go over our balance. It was an awesome class. I was in 5th grade. I never got a class after that came anywhere close through my high school, junior high school, and collegiate years. Crazy. All right. Hey, John, good to see you. Your overhead bin. Ooh, yeah, way better with sound. Just watching my mouth move and my ugly face, not working, buddy. Glad you could see us, John. So anyway, yes, Celsius, Voyager, even Nexo. So Nexo is one out of Switzerland where you can deposit your crypto. They pay pretty good rates of return. They're lending that out somehow and earning yield on that, right? That's the important factor in how they make their money. What I want to see personally is I want to see the heavy, heavy, heavy hand of regulation on businesses like that. Because a customer like myself or anybody else here who's depositing into these lending protocols shouldn't have to worry about losing everything like we are with Celsius and Voyager and BlockFi and countless others, right? We should understand the risks going in, but we should also understand clearly what that business can and cannot do with my money. We all know that we are protected by keeping our accounts in the U.S. I don't know what it is in the UK for you, Rob, but you have, I'm sure, protection on your deposits at your bank through the UK and others in international markets. Here in the U.S., $250,000. So if they screw up with my money, they lend it out and they get all wonky or go bankrupt even, my money's protected by the FDIC. So that is why we earn such a low yield there. You know what? Regulate the market and give me a lower yield for my crypto. That's fine. But if I can get 3% on crypto versus 0.3% on standard, I'm going with crypto. All right. Are you on an airplane, John? Where are you flying? They often teach financial lessons over and it's funny. I actually have a chapter in this, Richard, called The University of Hard Knocks, right? Oh, it's 85,000 pounds. But you have comfort knowing that should all hell break loose and your company you have your money with goes under, I'm good for 85,000 pounds, right? So spread it around. Don't keep over 85,000 pounds in any account. That's the easy way. How do you join your CIL? Actually, down below this video, there is down in all the descriptions to every TraderMerlin show, there's a link to a free crypto class. I think it's 6 videos. It's very, very basic. Just to see if you're interested in there, you can find out more information, or you can go to tradingacademy.com and find out more information about that one. All right, so I went off a huge tangent there. That's called whiskey tangent, so I'll just keep drinking the whiskey. And by the way, for those who might be new, no, I'm not an alcoholic. I just like this is like my unwind for the day. It's Friday. I want to have a nice glass of whiskey. I'm looking forward to a fantastic weekend. I hope you all are filling up your dance cart with fun things to do for the weekend because life is short. Live every day like it's your last. Have some fun. All right, let's go and work our way up the ladder. We haven't even made it past the first rung. I started with Bitcoin, which is the worst performer on the day, down right now, actually, 1.07%. So let me run up the list here and get our final way to the top because we got to talk about oil and what happened with Russia. Here's the NASDAQ, down 0.64%. Now, on the day, looking pretty bad, but it started to recover there near the end. We were down over 1.3% at one point and looking really ugly. I was loving it because, as you guys know, I have 40 puts on right now on the NASDAQ 100. So good for me. It doesn't really matter at this point because I haven't closed the trade out, but right now I've got a nice profit on because we started this one about 6 days ago. And it looks like to me like it's going to be drifting lower to a pullback point. We shall see. So 0.64% slide for the NASDAQ. Gold down 0.21. I got to say, I'm a little concerned, but not freaking out about gold because I put this, as you guys can see on this chart, I put a line. This is not the way that you should do it, right? You shouldn't put a definitive line because price never turns on a dime. It just doesn't do it. So what we should do and be more professional about it is to map out a range. And maybe that range looks something like this, right? And what I'm doing is I'm just encompassing these 3 candles that go back to January 9th, 10th, and 11th of this year. And we came screaming down into it. We actually hit that line perfectly, which is 1876. Bounced off it and now looking a bit weaker. Today's candle for gold represents indecision. Really kind of chopping back and forth, not quite sure which way this one might break. And it's tough to say because it's been an aggressive sell-off these 2 days, sideways action, and now all of a sudden showing some weakness. So it does feel to me like gold is going to go lower, possibly getting down to about 1836. But at this point, it did not close below that demand zone. So looking really good to me. At least from holding perspective. It did break it, but it hasn't closed below it. Close is one of the key conditions. All right, so that was down 0.21. Then we started to get a little bit positive stuff. I'll get to all those questions in just a second. Russell 2000. Stop. Hammer time. Dun, 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 dun. Can't touch this. Looking good for the Russell, right? If you look at what's going on with the trend, we could add on moving averages here, yawn fest, because I know so many people like moving averages. I won't do a 200, but let's say we do like a 20. And notice where we are right now with the 20-period moving average. This is a very common industry moving average. Did we close below the 200-period moving average? No, did we close below the 20-period moving average? No, we did not. And we have a hammer formation today on the daily on the Russell 2000. So what does that mean? Well, if you're a futures trader, it means Sunday night, Pay attention to the Russell because for whatever reason, this was a solid red candle for most of the day, and then it ripped back up and closed near the highs. That's momentum. Now, unfortunately, the momentum happened on the close, going right into the close. It seems to me like this will probably have a rally to the upside. If that happens, I mean, you kind of need to have broader markets rally, but it's nice to see for anybody who's bullish on the Russell, this is a hammer at the bottom of a downtrend, well, a short downtrend, right at a moving average, and we can make the argument that it actually is coming into an area of potential demand slightly lower. So this is pretty bullish today, actually closing higher, 0.18% higher. All right, same thing for the S&P 500, which did not get all the way down and close below its 20-period moving average either. It actually kissed it, and you have a hammer formation as well, right? Someone called this a dragonfly doji because it's such a small range. Either way, dragonfly doji or hammer formation, it tipped into that 20-period moving average, bounced out of it, closed near the highs, actually showing a positive day for the S&P, up 0.2%. Does it look the same for the Dow? We are now at silver metal. No, it does not, right? It looks more like just chop. And again, we've talked about this for a couple weeks now. Dow is just middle of the range, chopping sideways. The moving average here is confirming that. You don't really need it. I'll get rid of the moving average just because I don't usually like to look at moving averages, but it helps some people understand the chart. So sideways chop, not looking great out there for the Dow. That said, it was 0.48% gain today. All right, the big news coming from crude oil. Crude oil was looking pretty sharp today, up 2.13%. Of course, this happened because of Mother Russia making an announcement that they're going to cut production by, 5% or something like that? I think it was 500,000 barrels a day they're going to cut their production. Now, what's interesting about this is Russia talking about cutting production of oil. Is that reactionary or being proactive? Because if you look at all the sanctions that are being put on by the global community, they're saying, hey, we're not going to pay above $60 a barrel for your oil. Well, Russia's going to just keep cutting production, so the price of that barrel will stay as close to, if not slightly higher, than that sanctioned price point. What it does speak to, at least in my opinion, is that the sanctions are working and hurting Russia, that they're not selling enough oil, and maybe their stockpiles are getting so big. I'm not an oil expert. Let's not pretend that I am. But if their inventories of oil and their stockpiles are getting too big because no one's buying it, cut production. Right, you cut production. So I think that this is a proactive move. It's actually fairly positive for anybody who's bullish on oil. Although you look at the price chart, we are still in sideways chop, right? I'm looking at that big yellow box I put on there, just going from the peak on December 1st of last year to the bottom we established on December 9th, and we're just chopping, right? Now, it looks good. This week's been great. I mean, been a phenomenal week, actually. Let's just take I don't know what line this is, but let's just show for the viewers out at home, what did the week look like? From Monday to Friday for crude oil, we were up from where it opened on Monday to where it closed today, an 8%. No. That's an 8% decline. Let's get that backwards. Got my lines wrong. That is a 8.86% gain in 4 days. 5 trading days, really. So pretty good. I think that's a great news for anybody who's long oil. I am long oil. Just so we know, I am long USO and I'm long UCO, excuse me. I'm sorry. UCO is the devil. So I'm actually USO. I'm USO and I'm selling calls against my USO position. Fine. Just been lowering my dollar cost average on that week after week after week after week. So fine with me. And that, my friends, is your top 7. But I'm not done. Hold on. Before I get to those questions, and keep them coming, type in those questions with question marks so I know which ones are directed at me. So thank you, Alan, and thank you, JB. I'll get to those in just a second. Let's talk about the dollar index real quick, which this is important. We showed this pattern yesterday. It's called a bullish flag formation. We're not out of the woods yet. Oh, now I screwed up the whole damn chart. We're not out of the woods yet, although it is important that we did break this line, this upper line here on this channel that's moving down. So it's a bullish flag, which means you got the 3 giant green candles, small little hesitation, a calming, if you will, a little bit of a pullback, and then boom, we could get that next move. Based off of the pull, for those who might be new to technical analysis, a pull is typically the impulse that went into that move before the pullback, which would be this gray line I just drew. You take that line, you move it over to where the breakout occurred, which is right here, and that gives us our target, which is right around 106. That's would be a pretty nice pop for, exactly, Oliver. It's a bull flag formation, and this is a typical measuring object that people like to use. Now look, Are we going to get all the way up to 106? I don't know. I'm not saying that because we have this bullish flag, it's guaranteed to go there. But probability starts to gain traction here because more people are looking for these types of patterns. There's AI and human code looking for bullish flag, bearish flag, things like that. This is definitely a bullish flag formation. We'll see if we get that follow through over the next few weeks. I still think you've got some obstacles like 105 to get through before we get to 106. But all in all, looking pretty good. And that's not even the big stuff. You want big stuff? Let's talk about bond markets. Oh yeah, let's lay it on us. Bond market's looking good today, right? I had this drawing here. And again, I don't like to use a lot of drawings like this, but I know it helps a lot of the viewers. So I decided I'll incorporate more of them, and then I will delete them once I explain them thoroughly. So for you new guys out there, if you got questions, type them into chat. Of course, new viewers, subscribe. I do the show every day, Monday through Friday at 2 p.m. Pacific. So this little channel we have on the 10-year yield, obviously been trending down since November of last year. But the question is it going to turn and start to go higher? I, for one, absolutely believe that the 10-year is going to go higher, and so does one of my regulars in the program, Bill Addis, because the yield curve needs to start to flatten out, if not go normal. Right now, the yield curve is inverted, meaning if I were to buy a 1-year bond today, I'd earn more interest in 1 year than if I invested in a 10-year bond. That doesn't make any sense. It should not be that way. That's inverted. And we are inverted right now because the short-term yield is higher than 3.7%. Right? How do we know that? Well, we can start by looking at the overnight rate. Real quickly, let me go here to this one, and I'll show you the overnight rate. Good evening, Shinobi. Good to see you, my friend. Been a while. Hope you're ready for a fantastic weekend. I just tried ChatGPT like a week ago. Oh, man, isn't that stuff amazing? If you like, ChatGPT's great. But you really want to have some fun, play with Midjourney. That is just epic stuff. So here is the real reason why we're inverted. So you can see here it says current target rate, 0.475 to 0.5. So we are basically at 4 3/4 right now for the overnight rate, which means that your 1 year is going to be right around 4, maybe 5%. Well, we look at the 10-year here, it's at 3.7. So I'm earning like 1% less. That's actually more than that, and I'll show you here in just a second for that 10-year. Now, does this break this trend line here and start to move up? I believe that it does, which certainly would mean problems for the housing market. I have noticed in my neighborhood a resurgence of people listing their homes for sale in the past few weeks. Why? Well, because it's probably become more attractive to sellers and buyers. Buyers might be able to afford more because the yield is going down in that 10-year, meaning the loans are going to cost them less. But as we start to see this thing tick up, it's going to cost more and more and more. Remember, when we were up here, right around the peak, I'll put a horizontal line on the peak of this 10-year. When we were up here about 4.33 on the 10-year, your 30-year fixed rate mortgage was about 7%. Right now, I don't know what it is. I'm sure we have some realtors in the group or lenders in the group that can tell me what the 30-year fixed rate mortgage is at this exact moment. My guess is probably about 6.5, 6 maybe, 6 to 6.5. But if this keeps rising, it's going to price people out of the market, and of course, that hurts the financial market. All right, that's that. Let's show the yield curve. Why don't we? Here's that yield curve. This is the 10 versus the 1, which, according to Bill Addis, and I agree with him, is the true measure of the yield curve. Notice how inverted we are. We did move up a little bit today, but you can earn 1.14% more money by holding a 1-year bond versus a 10. That is not a good recipe for future growth. Here's the market belief that it's the 10 and the 2. You can earn 0.77% more by holding a 2-year versus a 10-year. And again, we talked about this repeatedly, which is how amplified, how long it has been down inverted, and the magnitude of it. So this is unlike anything I've ever seen. I've seen inverted yield curves multiple times in my life, but never one that's been this long and this extreme. So who knows exactly what that damage will look like down the road. Right now, it looks pretty bad. But when's it going to hit? Right? How is it going to hit? I don't know, which is why I do have a bearish bias in the intermediate to longer term. Short term, I'm ready to ride out chop either way, whichever way that chop decides to go. So there we go. How long has that been? 31 minutes for me to get through our top 7. Of course, I did go on a few tangents there because of viewer questions. Thank you very much for those. Let me scroll back through here and see what questions came through directly. I'm just going to scroll through and look for the question marks before your question. So those who are new, put a couple question marks before, and I will answer those live, or I'll try to. Joe Nicholas says, how do you join your CRL? I already got to that one. JB, Merlin, are you still day trading or scalping? I'm not scalping. If so, how do you suggest to learn to do it? So I still day trade occasionally. I do not day trade like I used to. I used to be extremely active. I do 550 trades a day back in the late 90s. Don't even come anywhere near that. I am more a believer of the sniper approach versus the AR-15 approach, which is just shoot at anything that moves and hopefully you make some money. That worked back in the late 90s. Now, much more of a sniper. I have to think about my shot. Not, and I hate to use this analogy because it's violent and war and death, but if I'm a sniper, I need to find out exactly what my target is. I need to see how they're moving, what their actions are, but more importantly, what's the environment around that individual that I might be sniping or that trade that I might be sniping? Because if I can take out that one, great, but if there's threats all around it, then I got to back away from the situation. As a trader, I look at the same way. Whether I'm doing a 5-minute intraday day trade, an hourly swing trade, or a daily, position trade, I'm always trying to figure out what the threats are in front of me. And that's the most important piece is the stop losses and threats. When I say threats, it's the stop loss. So I do not high-speed day trade anymore or scalp. Scalping was simply buying at the bid, selling at the ask. Nobody does that anymore. Someone's trying to sell you a course on tape reading. Bullshit. It's a lie. I've heard so many people tell me there's some people that are selling them or trying to sell them a course on tape reading. Not going to happen, guys. You're not going to read the tape anymore. There's too much BS that goes on in there. There's iceberg orders, reserve orders. There's all sorts of ECNs which allow you to remain anonymous. There's dark pools. Don't waste your time being a tape reader. Look at the charts. Be a chart reader, not a tape. Tape's dead, in my opinion. It worked for Jesse Livermore in the 1800s. It worked for Merlin Rothfeld in the late 90s. It doesn't work anymore. So I don't day trade all the time. Every now and again, if I find an opportunity like today, I had IFF on my radar. I wanted to trade it, but I was just too busy this morning with classes and building content. I had IFF and ETR were two I mentioned on yesterday's show, which came right down to demand. I'll show you those. You guys might remember. I don't want to sound like Sam Seiden and just calling numbers out of thin air, but we looked at IFF, right? I talked about IFF on the daily, which was a crazy one, way oversold. And I drew that yellow box yesterday, came right in that area of demand. And now today, you had a nice rip out of it, right? I didn't make the trade because I was busy, so I will let you know if I do take these ones. But we called that one out yesterday because somebody asked me, hey, what are you looking at? What stuff can you look at for tomorrow? And I said, this is one I'm looking at as a long for tomorrow. Another one was ETR. I actually like ETR better because of the way it's on a downtrend, but it just came into the lower end of that demand zone right there, like right near the very bottom of it, bounced out of it today. So typically, that's the type of stuff I'm looking for, which is price coming back into demand zones or supply zones, trading those bounces out of it. I love using candlestick formations to set up trades for the next day, but not a lot of day trading. I'm trying to do a lot of other things at this moment, which prevents me from sitting in front of a monitor, which is why I love my 1% strategy. Some of you know that one. You can go to the YouTube channel under TraderMerlin and type in the 1% strategy, and that's a trade you do once a month. Way better from a life quality perspective. Would you rather sit there all day and be focusing on all these little trades, or make one trade a month and just go do whatever you want to do? I'm trying to do more of that. So thanks, JB, for the question. I appreciate it. Philly has a better defense. You have to admit this. Philly has a better defense than the Chiefs. Absolutely. There's no question. The Chiefs' defense is a question of do they show up or not? The offense, I actually got to go with Kansas City. Patrick Mahomes is, as much as he drives me nuts, that guy is one of the best quarterbacks ever. If his ankle is fine, Chiefs win by 7. Let's see. What other questions do I have? Bull flag. I'm looking for questions. There is now a ChatGPT service that helps generate Mid-Journey. Yeah. I've actually been, Tom, this is kind of fun. Go to Mid-Journey and ask it to you create a scene, and then you take that text and you put it in Mid-Journey, and the pictures are, holy cow, way different than what I do manually. All right, Michael. On the lighter side, I use ChatGPT to write a 3-line poem for a good-looking blind date. Wow. Who's writing poems? You're old school there, Michael. A blind date writing poems? Such a romantic. Ladies, props to Michael for poem on a date. I got to try that one. And she was impressed by my originality. Oh, that's great. Hope that she's not like a computer scientist and goes and checks your work on ChatGPT. You plagiarize that? Oh, that's great. Let's see. Richard says, when you sell calls on a position, how do you figure duration and target? I know you have covered it again, but quickly, please. So Every situation is going to be different, Richard. With the situation I'm in right now, which is in boil, right? I have covered calls against my long position on the QQ. So I have a long position on QQQs, but against 295, my position should be taken away next Friday unless we close below 295. So that's fine. I have calls on my USO. I don't know the price off the top of my head. On boil, in this case, I'm going at the strike price that I got it at because the premium is so good. What'll ultimately happen is I won't lose any money on the exercise, which I got exercise at $7. I won't lose any money on that. And I've been collecting premium for the last couple of weeks on it, and I will continue to sell those sevens. Now, if it drops much, much lower, then I might think about dropping my strike price on those calls that I sell. So let me just really quickly show you here. Let's go to boil. And again, for anybody who's following this, be careful. Boil is very dangerous. I mean, today was a day that makes me really want to celebrate. And just for that, what does that mean? Another sip of whiskey. That's right, OG. That's really good. I hope she's not watching the show right now. Don't recommend the show to your blind dates. Wait till you're dating them first. But if you look at boil, you see the red line up at the top. That's my my exercise price. Now, I've been selling calls for the past 2 weeks on this one. Actually, it's 2.5 because my calls that I sold this week expire next Friday. So I went 2 weeks out because the premium was so much better. In this case, my average right now is $6.16. So if it closes, below 7, I'll sell them next Friday or next Monday. After the following week, I will sell those calls again against that position. Now, how far out am I going? Remember, as a seller of options, time is your enemy. I'd rather sell them for tomorrow if I could. If I could get enough premium, I'd sell it for tomorrow. If in this case with boil, I'm doing them weekly. And the rate of return for a week on boil is about 5% per week. It's incredibly elevated. Now, don't get excited and then think, hey, I'm going to buy boil and start selling calls against it, guys. This thing is dangerous. It's like juggling chainsaws, right? I can handle it. And as I explain this, I want to read a question or comment that came in from Marcus. Marcus, thank you. You made me laugh out loud. But people have to remember, I have been doing this for 27 years. I'm numb to the anxiety in most cases. There's some points where I still get a little worked up. But Marcus says this: following your natural gas trade gives me anxiety. What advice do you have for newer traders on dealing with anxiety? This is easy. Don't trade this stuff. You trade things that move very slow. If you're someone who's really nervous, then go out there and trade the diamonds, DIA, right? That's the Dow. Price point's not going to hurt you too bad. Doesn't have crazy major swings. I would go with the diamonds. And if you want to use the option strategy, fine, you can do that. But you can't start out juggling chainsaws. I've used this analogy a million times. I think you guys will remember this one. The analogy is this. I love, how many of you have been to Barcelona? Barcelona, Spain. One of my favorite cities. I would say Amsterdam's number 1. Barcelona is probably number 2. Country-wise, Thailand is the best. However, city-wise, Amsterdam, Barcelona, number 2. And there's a thing called Las Ramblas, which is this major tourist street, right? And on that street, there's so many street performers. And I want you to imagine you're walking down this beautiful, really busy, rambunctious street with a lot of people, and there's street performers. There's people doing card tricks, there's mannequins, there's 3-card money, there's all kinds of fun stuff going on. And I want you to imagine you're walking down that street, and here's a guy, and he's got 5 tennis balls, right? He's got his little Dunlop, and he's doing behind the back, and you're like, woo, yeah, wow, amazing. He's doing this amazing juggling act, right? And he's got a little hat in front of him. At the end of that juggling act, you're like, okay, well, great. Here's a euro or 2. You walk down the street a little bit further, and here's this guy, and he's got 3 Husqvarna chainsaws. And he's like, wah, they're going, the blade's spinning, he's juggling these things, and you're like, holy crap, are you kidding me? You're going to be mesmerized, right? You're standing there staring at this dude going, oh my God. So he finishes, he grabs the last chainsaw, you look at him, he's got all his fingers, everything's fine. You're like, man, here's 10 euros, right? He's going to get rewarded more because of the shock and awe factor of juggling chainsaws. 1 year later, you walk down Las Ramblas, the guy with the tennis balls, he's no longer doing 5, he's up to 6 or 7. You're like, yeah, here's a euro. Walk down a little bit further, where's the guy with the chainsaw? He's got an arm missing, and you're like, how's it going? Not so good. That's boil. So be careful. Don't jump into Boyle. It is really volatile. Naum says, I enjoy trading Boyle, very volatile stock. You've got some experience, Naum, because you know this thing is dangerous as all hell, especially the way natural gas is going. I mean, I loved our discussion we had with John Rowland the other day. You don't know where natural gas is going to go. I mean, if natural gas has the same crazy storage issue that oil had back in 2020 and natural gas goes negative, I'm going to lose my shirt on this thing. I'm going to get smoked on Boyle. It's a risk that you got to go to. Selling the cool. Anyway, had to throw that out there. Walk away, don't trade. Yep. So Liz, as seller options, you said time is your enemy. You meant to say it's your friend. Well, it's your enemy and your friend. So time is your friend if you're selling short term because it's long. You only have a week. It's your enemy if I'm selling and I sell a month out. That makes it my enemy, right? If you're as a seller, you want to sell short term. If it's a buyer, you want to buy long term. So I won't buy an option with less than 90 days. It's got to be 90 days or more if I'm buying. If I'm selling, 30 days or less, right? But because the premium is so unbelievably good on Boyle, I've been doing weeklies and doing really well. So you're right, Liz, but it's a friend and enemy depending on which time frame we're looking at. So good comment. Frenemy, there you go. I like that. Let's see. Views on how long Gensler will stay at his job. I hate to say it. I hope he's gone as soon as possible. I'd like to see some. And the irony is that Gensler is actually he understands crypto. So the fact that he's this callous on the industry blows my mind. I hope he's gone as soon as possible. I'd like to see somebody that understands that by banishing staking, right, by removing staking from U.S. markets, what you're doing is you're saying, I want Americans to now go to DEXs, decentralized exchanges. I want them to go to foreign marketplaces using VPNs and get access to these markets that I am preventing them from getting to in America. That's stupid. That is absolute stupid thwarting of growth and innovation. So yeah, I hope somebody smacks him upside the head real quick and says, you can't be doing this. There you go. So I think I got all the question marks that came my way. Exactly. Hester, I have to plead the fifth on that one. I want more elected officials. It's funny. I actually was looking at potentially signing up for my local government body down here and becoming a politician, but it ain't gonna work for me. No way that's gonna work. All right, let me go through. So I hope that I answered this question from Marcus. How do you deal with it? You don't trade this stuff. You go to something that moves slowly. You go to something that you understand and it moves slowly. Therefore, if you're wrong, you don't get smoked. You don't blow your account. Your goal in your first 6 months of trading, in my opinion, should be to not blow your account. If you blow your account, you're done. You can't do this anymore. Game over. So don't trade anything crazy. Don't trade anything volatile. The exciting stuff is Boyle. The exciting stuff is natural gas. It's not trading the Dow, but it's not about excitement. It's about getting the foundation so that you can drive, right? I guess we could all make the argument that trading or racing in the Formula One would be awesome. How crazy fun would that be? But none of us here are qualified or skilled enough to do so. So what are we going to do? If you've never driven a car before, I remember my father took me out in a parking lot at Sonoma State University. My stepfather took me out in a parking lot at Sonoma State University. There were no cars as far as you could see. It was just a giant open lot. And I drove a Toyota 4x4 pickup truck with no power steering. You start off in the safest environment possible. Was that exciting? Not at all. I stalled that thing 15 times that day. But you start to get better at driving and better and better. You start to learn the rules of the road. Hopefully you got a co-pilot with you that tells you, don't do that, don't do that. That's trading. So start off slow, Marcus. Don't follow my Boyle trade. Do not follow my Boyle trade. I would listen to it and understand kind of the concepts, what I'm doing, but it's dangerous. At this moment right now, it's a winning trade. But yesterday, it was a losing trade. And it's okay. I know I have until next Friday to make a decision as far as what I need to do with that trade. And I already know what I'm going to do. I will most likely continue to sell calls against it at any price under $7 by next week. If we close Friday under $7, I'll sell calls again on Monday morning. And we'll see how that pans out. So be careful. Sean, that's why I'm trading my wife's money. That's a good one. Have you looked at Deribit as a decentralized options exchange? Yes, I have, absolutely. And they're growing. It's just there isn't a ton of volume there, but I'm hoping it continues to build. As an American, you cannot use it, which is shocking, right? Most platforms Americans cannot use. However, you could use a VPN and pirate into those ones, but that's sketchy. It's a little bit risky. We used to do skid testing in snow-covered parts. Yeah, Mark, I went to visit my buddy Nick in Milan, or in Trento, northern Italy. Nick, if you're watching, hope you're having a great night. That's the same thing. He's like, you want to drive in the snow? I'm like, I've driven in snow before. He goes, no, I want you to practice sliding. I'm like, oh. So I got in his car, and we just went open parking lot and sped up, locked him up, and tried to, correct the turn. That's how you learn, is by really doing something, right? I know there's many of you here who say paper trading is the way to go to start off. I disagree. I think paper trading, there's no emotion, there's no skin in the game. Go out and trade real. Trade with one share if you have to. Buy one share of something. It's not going to cost you a lot of money, and you're not going to make a lot of money. Great. It's about driving the car. Anyway, let's see. I had one more question. How much time I got left? Holy cow, I'm gone past my means. And I want to make sure I get to this one because Les, love you, brother. You always send in he's always the first one here, and he always sends in questions underneath my YouTube channel, which I love it. And again, if you have questions, type them under the YouTube channels. I will incorporate them in, and therefore, let's give Les some props. Les, he says, I see when Powell gives a speech on Forex calendar, it gives his speech more importance than a voting member giving a speech. Other than running the meetings, does Powell have more power than voting members? Yes. He doesn't just run the meetings. He is the one who makes the decisions. He can take the input from the other voting members. I think there's 13 of them. He can take all of the information, and ultimately it's his decision. So in theory, you could have dissension. Let's say, I think there's 13 and then he's the 14th, or there's 12 and he's the 13th. I forget the exact number, so forgive me. But let's say there's 13 total and he's the king. If all 12 say, we should stop raising rates, stop, and he's going to listen to all their reasons, does he have to stop raising rates? No, he doesn't. He can say, I appreciate what you're saying, and I've taken your consultation to heart, but we're raising 50 basis points. He can do that. Now, I'm sure there'd be some media backlash and stuff like that, but he has that power. That's why Powell is the man. When you hear about Boehnert and some of these other guys speaking, it's nice to hear what they're thinking, because it might give you a heads up what could happen in the future, because they're just telling you what they're conveying to Jerome Powell. But Jerome Powell is the man, right? He is the kingpin, which can make all the decisions. And he's the one that when he speaks, that's law. So yeah, that's why he has the most weight over any of them. And you will see sometimes there are more weighting given to different people. All right. Let me wrap things up here because I'm getting long-winded, and as you can tell, I'm down to the warmed ice cubes. Oh, I didn't even show you. I'm to the warmed ice cube over here. When the ice cubes start to disappear, I know it's too long of a show. So let me go to your economic calendar. I'll answer a couple last-minute questions, and we'll bounce out of here. This is for Monday the 13th. There's really nothing on the earnings front that's really that noteworthy. And if you look at the economic calendar here, you can see that for the UK, that's really where most of the stuff is happening. About 11 p.m., which will be tomorrow, Monday after the show, you've got claimant count change, average earnings index, and unemployment rate coming out for the UK. They're at 3.7, so in the race to the bottom on unemployment, we're winning. We're at, I think we're at 3.4% here in the U.S. Still, for the UK, 3.7 is a pretty damn good unemployment rate. That means that things are looking really, really good. Agent Sancho, glad you could join us. And that is kind of it. I don't think that I went into the economic stuff for today, so I'll show you that very quickly, and then we'll wrap up. This is what happened out there today. Mostly it's the UK, and you notice at the top, this is not good, right? They were expected to go from 0.1% GDP month over month to 0.3%. They actually dropped to negative 0.5. Now, I didn't pull up a trend of the chart to see what that looks like, but again, every big trend starts as a small trend. And potentially, I'll bring it up for you in just a second. Here you have the UK GDP numbers. And let me zoom in post-pandemic so you can see what it looks like. Notice that there's been this real choppiness, but a majority of it has been below that zero line. Zero line's right here. Not looking good. And if that continues, it seems like every fourth quarter it drops lower. So you got this negative one right now. Negative growth for the UK is not a good thing, and it means more global slowdowns, more unemployment, and just kind of negativity out there for the UK. Anyway, wanted to share that with you guys. Let me see if I have any last-minute questions here. Coming around understanding that risk management is the secret to survivability. Richard, that's all it is. Literally, trading is, this sounds cynical. You could take the Wall Street Journal, put it to your wall, grab darts, and say, I'm going to go long this stock. Throw a dart. And as long as you put a stop loss, an entry, a stop loss, and a price target, you'll be okay. I asked the European Union. So some of you might know, I was hired by an Italian company to come over to Europe and build direct access education for the European Union. And I asked the people there, I said, hey, can you get me in touch with the EU guys and see if I can get 50 grand or 100 grand or whatever amount they want. What I want to do is I want to do a study, university study, that shows that you don't have to have any knowledge of financial markets. None. What you have to do is you have to look at a price chart and you throw a dart at the Wall Street Journal that says, okay, this is on Microsoft. And you say long or short before you throw the dart, right? All right, long. Boom, hits Microsoft. Does that mean I just buy willy-nilly Microsoft? No. What it means is you buy Microsoft. If Microsoft is in an uptrend, you buy 1,000 shares. If Microsoft is in a downtrend and my thing is to go long, I'm only buying 500. So I'm already taking the trend into consideration, and then I have my stop loss and my price targets. And from that, if you just do that consistently, you should be able to make money over time. I never got to do the study. Maybe at some point in my career, I'll do that as an empirical study for myself. But yeah. Let's see. Liz says, thoughts on CPI and PPI for next week? Not that I want to lengthen your show. I noticed Big Eb's not here, so maybe we should do an hour show just to piss off Big Eb if he watches the recording. I'm kidding, Big Eb, if you're watching. So what is it? Tuesday, you have CPI numbers, and on Thursday, we have PPI numbers coming out. Right now, the expectation is we are currently at negative 0.1, which makes everybody feel warm and fuzzy. Warm and fuzzy because we're seeing inflation decline, right? Year-over-year inflation right now is at 6.5% according to CPI. If that number jumps, which is expected to go on month over month from negative 0.1 to 0.5, that could start to spook the markets a little bit. I think it's a lofty jump. I don't really feel like that's been happening. I think they set that bar really high just so they can miss that mark and the markets will rally. So getting into Tuesday could be a very interesting day. Tuesday morning, if that CPI number comes out, my gut tells me that they estimated too high so that we miss it and the markets should rally. So I may have to reevaluate my put position on Monday. I've got a nice profit right now. I may close that out just to get away from the CPI and PPI data coming out this week. There you are, Big Eb. Good to see you, my friend. I knew you were hiding here somewhere. All right. So, Shinobi Brian, I apologize because you may have heard me say yesterday that I was going to do a show today on the turtles. I got 3 different questions. What are the turtles? What do you mean by this? How do they work? What are the rules? And I thought, you know what? Instead of me doing kind of a third of this show on the turtles, I will do a full show on Monday on the turtle traders, what they are, who they are, how they came to be, what the rules are, and then we can evaluate, or you can evaluate with me, does this strategy still work today? So Monday's show will be all about the turtles. Let me look at my calendar because I do have a couple guests coming on the program tomorrow. Justin Krebs is Tuesday. Sean Reed is Thursday. So Monday will be turtles. Tuesday will be Justin Krebs talking taxes with regards to trading. Thursday will be Sean Reed talking short-term options. So that will be Sean Reed is a great option seller collecting premium. It sucks that I have to interview him because I want to be writing notes and understanding the psychology of what he does because he's been trading options a lot longer than me. And I've noticed that from my experience, my selling of options has gotten much, much better, but I know that I can improve and get even. All right. I think I got them all. There's no more question marks coming my way. Big Eb has the last comment out there with, I'm listening while driving. I can't give them the benefit of a 1-hour show. We are at 55 minutes today. For anybody who's new, hit that subscribe button. If you like the show, give me a thumbs up. If you don't like the show, email me at TraderMerlin@gmail.com and tell me why you didn't like it. Put your comments down below the YouTube video. I hope that you all have a fantastic weekend. Do something fun. By the way, I saw a Twitter post about it. I don't know if you guys saw this. I see so much crap on TV about police beating up somebody or just stupid people fighting over stupid things. I forgot exactly where it was. I commented on Don Frahn's Twitter feed, and maybe I'll put it out myself, where this cop pulled over some kid, and the kid is having the worst day of his life, just crying, sobbing in the car, and the cops were like, hey man, they weren't being aggressive, they were being calm, being understanding. Of course, the kid was being very understanding as well, not aggressive towards the cops. And the cop's like, finally goes, is there anything I can do for you, man? And the kid goes, I could use a hug. And the cop's like, I can give you a hug. So he gets out of the car, gives this poor kid a hug who sounded like he was suicidal, and is like, the world needs more of that. So I can't say go hug a random stranger because you might get, somebody going after you or calling the police on you. But find somebody you love, give them a hug, help someone out, help your neighbor, be a good person. I will see all of you on Monday. Take care, everybody. Have a great weekend.